Welcome to the Pennsylvania Small Business Development Center's Entrepreneurial Education Series. Because this series is designed to help you learn at your own pace, at the end of each slide you will hear a click indicating the end of that slide's narrative. Click the forward button or anywhere on your view screen to advance to the next slide. This educational offering is funded in part by the United States Small Business Administration and the Pennsylvania Department of Community and Economic Development. The Pennsylvania Small Business Development Centers is a network of 18 centers located throughout Pennsylvania. We offer no-fee, confidential one-on-one business consulting in a variety of business areas, including financial management, marketing, business planning, and business structure. We also offer consulting and education in specialized services such as international trade, government marketing, environmental management, and business continuity and survival services. Our goal is to provide entrepreneurs with resources and information that will empower them to grow and prosper. This webinar series is designed to prepare you to enter the world of entrepreneurship. At the completion of these 6 webinars, we hope you will be comfortable with the concepts of registering your business and reaching out to lenders or investors, understanding your target market and financial statements, as well as writing your business and marketing plans. Each webinar should take you less than 30 minutes to complete. Financial statements tell the story of your decisions in numeric form. In this webinar, we review financial statements and their functionality. The financial statement is the foundation behind the financial analysis of your company's performance, your business taxes, and the funding decisions your investors make. In relative form or ratios, these numbers depict your company's financial standing and its health in comparison to other similar companies or the market and industry in general. Financial statements are essential to running a business. Income statement, or P&L, shows the profitability of your company. Cash flow statement depicts a flow of incoming and outgoing cash. And the balance sheet shows a snapshot of the overall value of your business at any given point in time. Your business plan must also include a sources and uses of funds statement, which shows how much money you have, how much you need, and how you are going to spend it all. The assumptions behind your financial projections are as important as your financial statements. The income statement, otherwise known as the profit and loss statement, is the document prospective funders turn to for answers about the profitability of the business during a specified period of time and the fixed and variable costs of producing and selling your products or services. It is read top to bottom and taken at face value. As a startup, your income statement and other financial statements will be projected pro forma statements. This means that their figures, although substantiated by research and quotes, are hypothetical. Prepared for multiple months and years, it also shows seasonal fluctuations in sales and expenses. This slide shows an annual profit and loss statement for a small sandwich shop. The forecasted sales is the very first line item. Subtracting all expenses directly related to producing the product or service being sold, cost of goods sold, will bring us to our gross profit. In relative terms, the relationship between gross profit and total revenue shows how efficient this company is compared to its competitors and the industry. This ratio, compared to the industry average, would provide answers about the company's efficiency. Industry average ratios are published by Dun & Bradstreet, Securities and Exchange Commission, and other entities. It is a good practice to compare your company's ratios to these on a regular basis. Normally, An owner's withdrawal can be claimed after the bank and the IRS are paid. An income statement is an integral part of a business plan as well as a business loan application. Depending on the type of business, it is customary to provide your investor with monthly projections for the first year and quarterly for years 2 and 3. Attach a financial narrative to show your reader the research and your reasoning behind the numbers. It is also prudent to attach copies of supporting documents, all in appendices, of course. These would include lease documents, utility bills, a marketing budget, a salary breakdown, etc. The cash flow statement is your company's checkbook registry as it shows your ability to pay day-to-day bills. There is a lot to know about a cash flow statement. Many entrepreneurs will reach out to an accountant or an SBDC consultant in his or her search for perfection in building this document. A software such as QuickBooks or SAP, a wise decision for any business, will compile financial statements automatically based on input of transactions. In this section, we will examine the most essential elements of this financial statement. Its purpose is to report your firm's inflows and outflows of cash in these 3 major categories: operating, such as cash inflow from sales and cash outflow from paying taxes; investing, such as the cash inflow from selling your old equipment and cash outflow from buying new; and financing activities, such as cash inflow from securing a loan and a cash outflow from repaying it. While building your cash flow statement, be mindful of all your cash inflows and outflows, and remember that the preceding month's cash balance, the last line item of the document, is carried to the following month's cash in hand item, the first item on the statement. Here is an example of a cash flow statement for a small sandwich shop. To a business owner or an investor, a cash flow statement is a map. It can identify a firm's need for financing, reasons for discrepancies between net income and net cash flow, and other activities within a company otherwise invisible without a cash flow statement. The balance sheet is a company's value at a particular moment in time. A few basic rules must be followed to build a proper balance sheet. Liabilities and shareholders' equity must balance with assets. The formula assets equals liabilities plus shareholders' equity is a rule when building your balance sheet. Another rule is how you list your assets and liabilities. The assets must be listed according to their liquidity in descending order, cash on top. The further a line item is from cash, the less liquid it is. Liabilities are treated similarly with short-term liabilities on top. The shareholders' equity section is normally comprised of amounts initially invested by owners and earnings reinvested in the business. Another use of financial statements and the balance sheet in particular is ratios. There are many ratios to consider when analyzing your company's efficiency. Here we only mention a few, and your SBDC consultant will be able to help you with the rest. The current ratio shows your company's liquidity, and the debt to equity ratios show how leveraged your business is. These and other ratios are used by investors and compared to industry averages to determine a company's health. Here is an example of a balance sheet. As you can see, the sum of liabilities and shareholders' equity equals assets. The most liquid assets and short-term liabilities are listed first. The sources and uses of funds form is used to project the sources of investments into a company and their subsequent uses. By analyzing the sources section of this form, a lender can see exactly how much funding a startup needs and a detailed account of the anticipated sources. The uses section outlines exactly how these funds will be allocated and used. These two parts of the form must balance. Thank you for viewing our Understanding Financial Statements webinar. Please visit our webpage to view other webinars within our First Steps series. They include How should I structure my business? Where can I find funding to start my business? How do I sell my product or service? How do I write a business plan? And costs to consider when starting a business. If you reside or plan to engage in business activities in Pennsylvania and you would like to meet with one of our consultants, please contact your local SBDC by visiting www.pasbdc.org to find the closest center to you. If you are located outside of Pennsylvania, please visit asbdc-us.org to find your local SBDC.